We're going to be looking at every single pair, every single trade that you could have taken this week, from analysis to entry points to stop loss to take profit management.
Okay, so always starting off marking off your weekly low and your weekly high. So there we had two key weekly areas. So already going into the week, we could identify that we have a 1, 2, 3 triple top on the weekly time frame. Then from there we're dropping down to daily. Then on the daily we want to identify key daily areas. So we can see we had no daily low, so there was a daily low over there. So that's obviously the area that we were targeting going into the week. So just off the bat, we could see not a big volatile week, only moving in 80 pip range going into this week. So if you look to the left hand side, you can actually identify all that selling pressure, and that will act as an area of supply. So you can also add that in. Then we can drop down to the 4H. So the 4H is mostly where I monitor my market. I don't always execute trades from the 4H, but I sometimes monitor the market going into the 4H. So this exact trade was also shared on the free community, where we were looking for short positions going into the week. As we tapped into that level, we had a nice rejection coming in, and then from there just retesting. So on the retest, we have a few things lining up. Number one, that spinning tops. So that spinning tops on the 4H is usually a really good indication of where to look for entry. So after the spinning tops, we had a nice push to the top side. So this is something you guys will see a lot after the rejection price. There's a big bullish push into the area of supply, and that is usually just to scare some traders out, because now you're going straight into profits, and all of a sudden the big bullish candle comes out, you get terrified to be in the market, and then from there you obviously try and exit your position. So I would have taken most probably a short position somewhere in that range after the spinning tops. Stop loss always above my key area of supply, and then extend my take profit. I will explain that now as well. For me, I know that this happens 80% of the time when price goes against me, so I usually have 1 or 2 sell limits. In this instance, probably 1 sell limit, a little bit higher as well. So if I'm taking, let's say, 1 lot size, I'd rather use a 50-cent lot size and another 50-cent lot size there. If price goes against me, then I increase my risk reward by entering there as well. So as I'm in this trade, I will obviously mark off that key area over there. So that's the area of support, and we can see that spike acting as an area of demand. So as price closed below there, we knew we could hold on to our trade because we are targeting the next area of demand. Price buys from that point, we can see the spikes to the left hand side, and that will also act as an area of demand, which we actually ended up perfectly respecting and pushing up from that side. So that would have been my long-term position. Alternatively, you could have identified, if you missed that trade, there's always more than one opportunity. You could have identified that area of that flag pattern, perfect flag pattern over there. So price trends to the top side, starts pushing up, and then drops to the downside. So after that break of structure, this is the trade that I actually took while we had the live session. Previous support becoming resistance. We can also see a lot of supply in that specific area. Then I usually just add my fib from my high to my low, and I look to execute based on that area hand in hand with my confidence, which in this instance will be the 61% fib. This is a little bit of a smaller time frame trade, also spinning tops over there and extending to the same take profit, because we know the bigger trade should be running to that specific level as well. So this type of trade I usually take on the 30 minutes time frame. So we can see the perfect rejection, perfect evening star formation, and then looking for that short position. In a case like this where we have quite a small stop loss, I won't add a sell order because we already have limited space to the top side and limited risk on that specific position. Finally, the last trade that we could have taken for the week is the buy. I doubt that I would have taken the buy, but we are in, if you look at the bigger time frames, let me just clean it off. On the bigger time frames, we're still in the uptrend, so you could have added your fib from low to high, mark off your 38% fib, which is also acting as a continuation fib. Then we can also see we do have the psychological level there of 750 as well. Price dipped into that area, hangman candle on the bottom of a trend, morning star formation with that bullish engulfing, and you could have also taken a position once price broke above that zone, and then obviously continuing to that target with the stop loss below that. Okay, so in this instance, once again, I always drop down to the 30-minute time frame as well. Look for a little bit of a smaller time frame shift of momentum, low, 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 high, so that will act as an area of liquidity, and then low, low, high, high, break of structure, and then from there You can either just look for a position from the zone, a little bit of a big area of demand. So I will also have a buy limit placed within my specific zone. And this is where smaller time frame fib comes in. And then you can actually just look for a nice trade from that 61 to 78% fib to increase your risk to reward. The euro order strong correlation to AUD/USD. So we knew we're looking for AUD/USD shorts, and that will indicate that euro order is going long because the euro is a free flowing pair. If we look at the chart, we are creating a lower low. So I wouldn't advise, or I wouldn't personally take buy positions, but you can still identify key buying liquidity within that specific area. And we can see there to the left hand side, nice buying pressure from that specific level. You could have dropped down to the daily, so going into the week as well, you only had that daily high over there, so that would have been your target. How do you actually get that trade? Just from a support area? I won't take it just from a support area, but you can also see there's multiple confluences. We do have the psychological level of 500 over there, so just from there you start painting the picture of what is possible. You can also add your fib on your previous trend over there. See if you can find a little bit of a fib extension. In this case, no, indicating there's more selling pressure still in this market, and there is some liquidity to be taken. So on the daily on Friday or Monday, we had that perfect hangman candle indicating a shift of momentum. If we drop to the 4H time frame, we obviously had this key area of demand already in place. You can also go back and identify that. And another thing that you guys can do, so you'll see over there, if you take that area, so from where price is rejecting to where price actually moves from, and you can also get your area of supply and demand like that, will give you a general indication of how big the areas of supply and demand is in that specific zone, and perfectly lining up there as well. So if I'm taking a pullback trade, I am understanding that this is not a long-term trade, but pretty much the same approach as AUD/USD. Nice flag pattern forming over there as well. And then for me, I would not have executed from that bottom lows. Okay, I would have waited for a shift of momentum. Once we have the trend line breakout and the shift of momentum, or the break of structure, then we could have added our fib from our previous low to our high position, looking for a dip into that previous resistance becoming support in this instance, and then also the 61 to 78 fib. Then there's also different ways you can approach it. So every time market keeps breaking structure, you can always continue the market to the top side or continue the trade to the top side. Trade management, there's usually a few things that you can do. I usually add my fib the other side. I can still add my fib because it can give me a exit location. So there is the 61% fib. If you look to the left hand side, there is some nice liquidity in that area as well, and that will then help me to refine where I'm looking for an exit point. And also, because we're in a selling trend, you can also look for that short position over there as well. So if price reach that level, you can obviously look for short positions, because then you're jumping back into the bigger trend. So in this instance, there was just a tap and a go. So what do you do in this situation where the market just hits a level and goes to the downside? That is when you start identifying selling pressure to the left hand side, and you see how you can scale in based on that specific selling pressure on the lower time frames. So once price closed back below this area, could have sold from there. There's a big selling area over there, so once price closed below, could have sold over there as well. And you can also use the same confluence that we use on the higher time frame. So once price pulls back, you add your fib. There's your resistance or selling area, and there's your 38% fib acting as a area of supply. And then from there, just take a simple short position, targeting that downside low that we have over there as well. So how do you exit that trade? Once again, multiple things that you can use. You can just see there's buying pressure over there, or you can add, I know the chart's cluttered by now, or you can just add your fib once again and try and exit on the opposite 61% fib. Okay, so your GBP are traded usually on a little bit of smaller time frames, but you can still go and put in your weekly key area. So we could see we have a nice weekly area there that we have been respecting for multiple times. So that is indicating obviously buying pressure, because we have a triple bottom on the weekly. And then if we go down to the daily, it's multiple things that we can see immediately. Price is creating higher highs, higher lows, higher highs, etc. So I would have marked off my key daily range over there, 0.1, 0.2, 0.3, 0.4 already. So going into the week, the start of Monday, there wasn't a lot for us to do, because we're already in a trend and we're sitting at that key daily selling area. And you don't want to sell, because daily is creating higher highs, higher lows. Weekly is creating higher highs, higher lows. So you don't want to actually sell against the trend like that. So that's usually when I just try and drop to the lower time frames and I see how I can execute based on that specific position. Price came into the week, drop off to the downside. So there was multiple ways to get that trade, just a simple trend line in there as well. And if you look to the left hand side, once you can always just identify where's the buyers at. There's buying pressure there and there's buying pressure over there. So then you can go a little bit forward and see how you can capitalize on that buying pressure that we have in. So if you add your fib from low to high, we can see we do have the 61 to 78% fib over there as well. And then a little bit of a difficult trade because we broke above and immediately continued to the top side. News came out, just a little bit of a liquidity grab. This is once again how news looks that goes against the trend. Usually just spikes and then continues where it's supposed to go. So in this case, just looking for that simple position to the top side. So multiple ways as well to know how to exit. So I'm just showing multiple ways through different currencies. So you can add your fib in from low to high and then try and take out your trade with the -038 and the -061 fib as well. Or obviously, as you guys have seen in previous analysis as well, you can add your fib from your previous trend. So basically looking to add your fib from that high to your low point and know that you should be exiting somewhere in the range of your 61 to 78% fib. Okay, USD going into the week, we had our weekly high and weekly low. We can see we are creating a lower low, looking for a lower high. So already that's indication that we're looking for short positions. So what I would do even on the daily time frame is just add my fib from my high to my low point. And that will also give me that 61% fib acting as an area of supply. And then you can also see there's some buying pressure there to the left hand side, which will come into play a little bit later on as well. And then going into the week, not once again a lot happening. You could have taken that short position over there. So now the question will be, where do you place your stop loss if you take a short position like that? Once again, drop down to the lower time frames. We've already taken out the liquidity on the higher time frames, forming that key weekly area. So from there, just the same thing that I showed you guys before. Just add your fib from your low to your high. Add your 61 to 78% fib. And then from there, look to execute based on that specific level. And if you miss a trade, you can go back, look at where there is some spikes like that, so big rejection areas, and that will also give you a little bit of a breakdown of where you can enter a specific trade for continuation trade. So that was about it for USD. Sell position there, another sell position there, dropping to a downside perfectly over there, and then now coming back to that same selling level, and this should also continue into that lower areas. Okay, then GBP order in the same boat as Euro order. So if OGSD is pulling to the downside, this is going to go to the top side, as the order is the controlling pin in the specific currency. So weekly high, weekly low, mark that off. We can see there's a lot of buying pressure in that specific instance. You can use your higher time frame fibs like this as well. We can see just below that area we have that 71% fib acting as an area of demand. GBP JPY also, we can see there is a weekly low, we can see there is a weekly high. So if we go down to daily, it's not a pair that I'm looking to trade at the moment, and the reason for that is because of all the things happening to the CHF. So if I'm trading GBP JPY, I'm always looking at CHF JPY, okay? Because anything with the JPY secondly, so GBP JPY, Euro JPY, etc., will be affected by this specific pair. So just by looking at that break of structure, you know that we're in a buying trend and you're looking for buy positions. That will indicate to me that I'm looking for buy positions on GBP JPY as well. So price came back to the downside. So in this instance, you would have hopefully seen that there's a little bit of a trend line coming into play as well. Price came down, dipped into that area, never triggering that specific area. So how do you take a specific trade like this? Because it never dips into any point of confluence. Once again, just start looking around. Start with a psychological level. Okay, there is 192 psychological level. So then we have that 78% fib over there. So from there, just like that, you have confluence. You can also add something like that. So a little bit of a trend line breakout strategy if that's something that you want to do. Once again, don't think that you need all these tools to actually trade. I'm just showing what is possible in this specific instance. So same thing, price just went straight up, would not get a trade over there. What do you do? You look to the left hand side, look at where there's buying pressure, and there you have a break of structure. After the break of structure, you can add your fib from your low to your high, add your 61 to 78% fib, and then just simply look for continuation trade, running the market to the top side. GBP USD also lower low, looking for lower highs. Already we knew looking for sell positions just based on previous analysis. We already actually had a lower high because that is obviously the previous week. So going into the week, you can go down to the daily and you can do the same thing that you did with your USD. So basically add a little bit of a higher time frame fib. See, okay, well, there is the 61% fib over there. There's a 71, there's a 78. So at the moment we are selling from the 78, but that is our key area of confluence. So what do? I look to the left hand side. I see there's selling pressure over there. Use my 71% fib as an area of supply, and then from there drop down to the 4H time frame. Going into the week, we had a nice drop off from that specific level. News came out. After the news, pulled back immediately, and then once we had a break of structure, only now we could actually take a position on current. Well, hopefully if we can get a dip into that level, only now we can take a trade. So now if you look at this specific area, you don't have to have that big area of supply. You can actually just move that zone to a downside, number one. Or number two, you can also add your fib from your high to your low. Then we can see we're selling from the 61% fib, and you can place your stop loss above the 78% fib. And then look for continuation into minus 0.38 or minus 0.61. And then from there, just once again manage your trade. So not a lot happening on this pair this week. You would not be looking for buys because it's obviously an uptrend, so you would have been favoring the short positions. The one you guys have all been waiting for is gold. How did I take my approach on gold this week? The document is free for all of you guys as well. If not, just click the link in the bio to get the free PDF of how I trade gold every single day. So before this session, I usually mark off my high point and my low point formed before the specific session. I don't care about the trend. Obviously, if I can see we're in an uptrend, I'm favoring buys, but I don't really care about the higher time frames or what's happening in that specific time frames. So you can see at the 12 o'clock candle, we're just floating in the middle of those areas, so we're not looking at it at all. Then from there, price comes and dips into our area with buying pressure. There's a spike to the left hand side, and that will act as our area of demand. So over there, pretty simple, looking for a long position, usually about a 700 point TP and about a 350 stop loss. So that's most of the time my standard go-to. It's once again just through multiple months and years of backtesting that I found that works, and you could have obviously extended that TP over there as well. Let's look at the following day. So here we had 12 o'clock once again, 12 o'clock to 4 o'clock. There we go. So I'm just going to quickly clean off this analysis over there. So before the session, once again, we formed that low point over there, and we formed that high point over there as well. Going into the session, price ends up dipping into our key buying area once again, and just like that, we know exactly what we're going to do. Same thing we did the previous day. Just look for a buy position, 350 stop loss, 700 take profit, or obviously extended take profit of 900, and just run the market to the top side. Alternatively, if you missed that move, you could have also taken the short position in this instance, and simply just look for a short position. Same principle over there, 350 stop loss, and then also a 700 or 800 take profit. So the key thing here is to understand that the 350 stop loss for me is based on a perfect entry in a way. So if I'm going to enter somewhere there, which is going to happen a lot, I do understand that I need to have a little bit of a bigger stop loss, because it's always determining where would your stop loss have been if you had the correct entry point. Then we come into the next day. So coming into the next day as well, we had that low over there, and we had that high over there as well. So going into this session, price rejects over there and starts dropping to the downside. So this is a little bit of an adjustment trade. This is an inverse head and shoulders pattern. Price then comes into that inverse head and shoulders pattern. If you actually added your fib, you can see the reason price bought from there is confluence. Remember, it all comes down to confluence at the end of the day. So we had an inverse head and shoulders pattern, we had a 78% fib, and that would have been a buy position. So not the cleanest trade of the week. I think those two are pretty simple. This one you need to adjust a little bit because you need to identify that buying pressure, and the fact that that's just a little bit of a liquidity grab to take out the early buyers, and then from there form the inverse and in shoulder. Going into Thursday, so Thursday was also quite an interesting trade. I actually ended up missing the buy and I took the sell position, which I will explain now as well. So over there 12 to 4 o'clock. Before the session, once again, we already had that key low in there and we had that key high in there as well. So in this instance, just simple looking for a long position over there as well. So very simple, same principle. I would most probably have a little bit of a smaller stop loss on this one as well. You can see there's the spikes, so quite a small area of demand that we have over there as well. So where did I take the short position? I saw the news come out, so I just went back to the 1H. This is something that I do a lot, and then I wanted to execute from that specific selling area. So I ended up taking a trade from that sell position. So as soon as price reached that point, I didn't wait for rejection or anything. I knew that I could have a really small stop loss on this specific trade, and I just took that run to a downside. So simple. Usually use half the risk on something like that because I know I was supposed to be in the buy position. Just use half the risk and then try and run the market to a downside.
Thank you everyone that is watching and supporting. I hope to see you guys on the next one.